Monetary Fund has turned more optimistic on the global economy. In its latest update, the IMF has raised the 2026 world GDP growth forecast to 3.3%, signaling resilience despite recent tariff shocks. India's growth outlook has been revised sharply higher for FY26 to 7.3% on strong earnings momentum, though the fund sees a moderation in FY27 as temporary factor fade. In fact, my colleague Anjali Palod breaks down what this means for India and the global economy. Anjali, tell us more.
Right, so the headline number is out. The IMF has raised its 2026 global GDP growth forecast to 3.3%, and that is up 20 basis points from the last forecast in October. The primary driver, according to IMF, is the massive surge in AI investment, which the fund says is offsetting the headwinds that have come in by the global trade disruptions. Now, turning to the world's two largest economies, both US and China have seen their 2026 outlooks upgraded by 30 basis points. The US is now projected to grow at 2.4%, and this is fueled by the lower policy rates and the new tax breaks, while China's 2026 growth is being pegged at 4.5%. Now, for us here in India, the news is a little bit of a double-edged sword. The IMF has raised our FY26 growth forecast following the powerhouse momentum we saw in the October to December quarter. However, looking further into FY27, the fund expects this growth to ease as these temporary cyclical factors begin to fade away. Elsewhere, the Eurozone sees a marginal bump at 1.3%, while Japan is nudged up to 0.7%. Brazil, however, has been downgraded to 1.6%, and this is following last year's monetary tightening there. The IMF has, however, warned that the risk remains tilted to the downside for the entire global economy. They're specifically watching out on the AI-driven market correction, renewed trade tensions, and the fiscal vulnerabilities in the high-debt nations. But all in all, the tech boom is providing the fuel for now, but the fund suggests the medium-term path remains complex.
Thank you, Anjali, for getting us those